what the growth outlook is now the company is officially listed. We've got the management of the company, Mr. Sinu Mathew, founder and managing director at Leap India, joining us, along with Mr. Radhesham Ale, the chief financial officer at Leap, also joining us on the show. Mr. Mathew, first let's begin with you. First of all, good afternoon, gentlemen, and congratulations on your successful listing. Mr. Mathew, could you walk us through the company's long-term growth roadmap and the key strategic priorities going ahead?
So you can see that since last 4 years we have grown by 43%, and we have our plans to actually continue the growth plans. As far as strategic interest is concerned, we will be adding new assets into the pooling model so that it can bring convenience into the supply chain in India. And as far as geography is concerned, we are moving to start our business in Gulf countries, which is a very natural extension from India to Gulf, because Gulf is an important country. So these are our natural extensions and strategic outlook.
Understood. But on that note also, Mr. Mathew, Leap India has a strong market position today. What prevents new competitors from replicating your asset pooling model? What kind of revenue and EBITDA growth should we realistically be looking at for the remainder of FY27?
I won't be able to give you any forward-looking numbers, but as far as competition is concerned, I have already mentioned that this is either a monopoly or a duopoly business, and the real moat for us is actually the customers and our network which we have created over a period of last 13 years. We have 10,100 locations. If somebody has to come and replicate it, it will take a decade for them. So, and we connect supplier, manufacturer, 3PL, retailer. So one pallet has to flow amongst all the 4 pillars of supply chain. If somebody comes in between, it technically disrupts the entire supply chain. See, this business is done in 56 countries, and nearly 34 countries it's a monopoly business. And even if it becomes a duopoly, then the second player has to take a different sector wherein the first player is not entering. So we are really not bothered by a kind of a competition, as we enjoy around about 90% market share.
Okay. And Mr. Mathew, you talked about asset addition. As your asset pool expands beyond this 14.7 million units, how much further can asset utilization improve and start contributing to your top line?
So currently, if you look at it, our pallet, the asset utilization is somewhere to the tune of 89.4%. Automotive is somewhere around about 72%, and 78% is round about for our MHE business. So we believe that max during season we go to 95-96% in pallet pooling, and in off season we come to 87-88. So we have to keep some pallets in buffer in our 29 warehouses in order to serve our customer, because whenever the customer orders, we deliver the pallets in 24 to 48 hours. Max we can extend it to say 92 to 93% as utilization, but yes, there is tremendous scope in MHE and automotive business, which we will be increasing by 3 to 4% in the coming years.
Okay, and Mr. Radhesham, you too step in here and give us a sense that after using 360 crore rupees of your IPO proceeds for debt repayment, what will your net debt position look like, and how much interest savings will this generate quarterly?
Currently, we are raising 480 crore. Against that, we are using 360 crore to prepay the high debt cost loans. And current debt is around 1,000 crore, and we pay 360. This will be around 640 crore rupees. That will going to help us in bottom lines for our coming years.
So if you look at it, we will be saving somewhere around about 34 crores of interest. And we have a war chest already there with us, which is to the tune of 115 to 125 crores. This money, we actually keep it, and we just do not spend this money come what may. So this 360 crores is actually going to help us to reduce the debt, get into a fantastic 0.6 kind of a debt equity ratio, and this will give us a huge credit line, and we will be good to go for a couple of years.
Understood. And lastly, Mr. Mathew, what will be the key drivers of earnings growth over the next 3 years? Would it be asset additions, utilization, pricing, or acquisitions, and what should we be looking forward to?
See, investors should be looking forward to that. There is huge depth in asset pooling in India. We are just around about 15 to 17%. There is a huge business depth. The moment the volume grows, we are a young country, we will eat more, drink more, bathe more. The tonnage increases, the pallet utilization increases. You can look at all grade B, grade C warehousing, going to grade A warehousing, so you need to have racking. The moment you need to have racking, you need to have a very sturdy pallet. So if we are in a company, there is a tremendous amount of growth which is coming on to the same business. We are expanding ourselves into textiles, paints, and various other geographies, various other industries also. So our shareholders can expect that we will be getting into newer supply chain solutions. Into one example I can give you is solar panel movement of modules. So all these will actually bring the growth. Definitely there is a price increase which is based on the wood price index, which is listed in German Stock Exchange. So there are 3-4 more criteria that we are looking at in order to get the growth, and plus the expansion to GCC.
Understood. On that note, Mr. Radhesham as well as Mr. Matthew, thank you so much for your time. Congratulations on the listing and good to be speaking with you.